Welcome to The Explainer. Now, on the surface, Santa Clara County has one of the hottest real estate markets in the entire country. But when you actually dig into the data for 2025, it tells a much more complicated story, a story of a deep and growing divide.
So, what is the real story hiding behind all those headlines? Well, by digging into the numbers, we can see that we're not talking about one market at all. We're talking about two completely different worlds, operating side by side, each playing by its own set of rules, its own speed, and its own outcomes.
So to really get this, here's how we're going to break it all down. We'll look at the speed of sales, the intensity of bidding wars, the kind of shocking price differences, and then we'll pull back to see if this is a new thing or if it's been building for years. And finally, we'll get to what this all means for you. All right, let's dive in. Every good story needs its main characters, right? Well, in the tale of Santa Clara's real estate, they are the single-family home and the condominium.
On one hand, you've got the single-family home market. I mean, it is the undisputed heavyweight champ, making up almost 8,000 listings last year. And on the other hand, you have the condo market, a much smaller player, sure, with just over 1,700 listings. Now, they might share a county, but as you're about to see, they're basically operating in different universes.
Okay, first up, let's talk about speed. Because for any buyer or seller, how fast a home gets snatched up, that tells you pretty much everything you need to know about how hot the market really is.
And wow, when you see it visually like this, the difference in pace just jumps right off the screen. I mean, look on the left. The bars for single-family homes are tiny. They sell in a flash. But then you glance over to the right at the condo market, and it's a totally different story. Properties are just sitting there for weeks, sometimes even months longer.
The metric we're using here is called days on market, or DOM for short. It's super simple. A lower number means a hotter, more competitive market where buyers have to act fast, like really fast.
And the difference is it's stark. During the absolute peak of the spring selling season, the typical single-family home was off the market in just 13 days. 13! Now for condos, their best month was April, and even then, it took nearly twice as long at 25 days. That is a huge gap in momentum.
Now, that difference in speed, it's a direct result of competition. So how intense is the fight to actually buy one of these homes? To measure that, we're going to use something we're calling the bidding war index.
And again, these two charts tell the whole story. For single-family homes on the left, the sale price was above the asking price every single month. That's a market defined by bidding wars. But for condos on the right, that ratio often drops below 100%, meaning sellers frequently have to settle for less than they ask for.
So the key metric here is the sale-to-list price ratio. Honestly, it's the clearest indicator of buyer competition out there. If the ratio is over 100%, it means bidding wars are the norm and homes are regularly selling for more than the seller was even asking in the first place.
And just how high did this go? Well, at its peak in February, the average single-family home sold for an incredible 109.2% of its list price. I mean, just imagine offering nearly 10% more than the sticker price, and that being just normal. That is a fierce market.
All of that speed and all of that competition, well, of course, it has a direct impact on the final price tag. So let's compare the median sale prices between these two worlds.
The visual difference here it's almost shocking. Just look at the price scale on the side. The chart for single-family homes on the left goes all the way up to $2.5 million. The condo chart on the right, it tops out at $1 million. They are not even in the same ballpark.
In May, the median sale price for a single-family home in Santa Clara County hit its 2025 peak, a staggering $2.15 million. And remember, that's the midpoint of the market.
This table really drives home the enormous price chasm. Get this. At its absolute lowest point of the year, the median single-family home was still over $1 million more expensive than the median condo was at its absolute highest point. The gap is just immense.
But you might be wondering, was 2025 just a fluke, a weird year, or is it part of a larger pattern? To answer that, we need to zoom out and look at the trend over the last 5 years.
And the pattern becomes even clearer. On the left, the median price for single-family homes shows this distinct upward climb, almost like a staircase. On the right, though, the condo market looks much flatter by comparison, with far less dramatic movement over that same period.
And the numbers here are just stark. From 2021 to 2025, the median single-family home price jumped by $360,000. In that same period, the median condo price grew by only $23,000. These aren't just different markets. They are on completely different long-term trajectories.
So after breaking down the speed, the competition, the price, and the 5-year trends, what is the single most important takeaway from all of this data?
It's this. Santa Clara County doesn't have one housing market. It has two. One for single-family homes, which is fast, fierce, and on a steep upward climb, and another for condos, which is slower, less competitive, and has seen its value largely stagnate. For anyone living or looking to live here, understanding which market you're in is everything.
And this all leads to one crucial question for the future. Will this gap continue to widen, effectively cleaving the county in two? Or can anything bring these two markets back together? The data of the next few years will write the next chapter of Santa Clara's story.